and good morning, participants. It's good to be here at the Africa Wealth Conference 2022. My name has it been indicated, is Njeri Jomo. I work with BRITAM Holdings PLC. I'm the General Manager for Retail Business Development, where I'm essentially responsible for everything that relates to the individual customer or the retail customer with regard to insurance and wealth management. Why is this such an interesting conversation for me? Because I'm passionate. I'm truly passionate about wealth creation. It's been 20 years for me speaking to customers about building their wealth, the different ways they can protect their wealth through insurance, working with young people on talent monetization and how to make sure that they begin to build a savings and investment culture very early, and definitely looking forward to the great conversation this morning.
Thank you.
We go to school and grow up and make money to take care of our parents. So I do look forward to really us unpacking that fantastic, very African concept. But to your question on stretching the shilling, is saving, as we've said, is a foundational discipline. It's about developing that habit of putting money away. But then there's a question of saying, how does this money work for me? And in the discussions yesterday and perhaps part of this morning, the whole conversation of active versus passive income, the fact that we work for the money we earn on a day-to-day basis, but we can only earn so much. The money has to be able to make money for us, which introduces a great concept of investing, making sure that this money is making money for you. So for us, and for me, I keep saying, and when we advise our customers, we keep saying customers are as different as they are investment ways of investing, and wealth creation or whatever is considered a good return is dependent on the client. Often what I like to say is the first stage we must begin for you to stretch your shilling is the goal. Why do I want to invest? Because often if you invest for, or if you try and stretch your shilling for the sheer sake of it, why would I give up spending it right now or later? Why would I want to put it away? You really must be clear on why and what goal is that is driving you to put it away. The first step, obviously, is it an emergency fund? Is it taking care of the immediate in case I lose my income? The second thing is, what are those longer term assets? Perhaps I have a family, I have children. I need to make sure I safeguard their future. I probably have a business. What are those aspects you want this money to be for you? And there are many ways that your money can make an extra shilling for you, which we have discussed extensively. But who you are as an investor is important. What is your risk appetite? Are you risk averse? Are you the kind of person who's happy with longer risks? And there are basic models that we use to define this. And we define different investor stages. For example, when we are younger, we say we're in the accumulation phase. You can take on a bigger risk appetite. We go even simpler and say you can go home this evening and not eat, and there'll be no riot in your house because you can take water and say I'm saving, or you can take a lighter meal and say I'm saving. And then we move on to the next phase, which we call the consolidation phase, when you're beginning to put together your assets. At this stage, we say you have some monthly expenses coming through, but you also have longer term dreams still coming. And at this stage, we look at a client who can take on more of balanced portfolio, some high risk, but some that take care of the today. And as you go into deaccumulation, you're older, you're taking on less risk. So essentially who you are as an investor is important, why you're investing is important, even before we begin to say, how are you going to stretch your shilling? So as you're saying, there are many competing needs for the money that we have. And as I started earlier, and I think even it's been touched on, is the aspect of saying, why am I saving? Why do I want to save? And who am I and what's my risk appetite? Now, the one thing about anyone speaking to you about investments is we are all very knowledgeable, but we are knowledgeable for many. And one of the things that I like to do with my customers is sit down with them and say, okay, why are you investing? What do you want to invest in? Typically, how long do you need it? Because if you think about even organizations, they have short-term goals, they have medium-term goals, they have longer-term goals. How long do you want to do it? If you tell me it is something where you're going to need money, perhaps in the next 3 months, then I'll tell you that is automatically a short-term, and therefore low-risk investment as a relationship. And therefore, you'd be looking for something like unit trusts. And I'm glad to hear Edward speak about that happening in Kigali. And I can tell you in Kenya, unit trusts are very many. You want to think about, is it a fixed deposit? What is that offers the opportunity? And there are a couple of things you're looking at in an investment. The first thing is, what are the underlying investments that are supporting that? If you're talking about, for example, investments that invest in treasury bills, treasury bonds, corporate bonds, commercial paper, then you're saying that is a low risk investment. If outrightly you're being told this investment invests in shares, then automatically you're looking at probably a more volatile, higher risk investment, and therefore needs a bit more of a longer time for you to do it. But what I'll tell you is, as you go through all of this, and this has been spoken to by earlier before, is the aspect of saying, take time to educate yourself on the various investment vehicles, because there's some level of information you may have, but I cannot advise more about going to a money doctor. Go to a professional who sits down with you and helps you select. One of the things that you'll find about the investment world, it's broad and it's deep.
Yes.
And there's the aspect of not just the right vehicle, but also a partner that you can trust. And that has been touched on a bit in terms of saying there are many types of investments, but you would also want to know who is behind this. Is there some, can you see experience behind it? Can you see a track record of performance? Or is it a briefcase, the type of company that's showing up tomorrow? No matter how good the deal sounds, you will want to check that fine print. So take some time, get to know yourself a little better, because you need to know, what do I want? You don't want everyone telling you what you want. They will guide you here and there, but you really are probably the best expert of you. And then 2, take some time to educate yourself a bit about investments. And then thirdly, go to an investment professional. You want to sit down, and throughout the World Conference, you're hearing from very many. Take time to listen to what they tell you, but don't make a decision immediately. I like to advise. You now have the advice. Step back, go through it, and make an why start now? There's a very common phrase: the best time to plant a tree is 20 years ago. The second best time to start it now. Why do you want to start now? The power of compounding. There's an interesting effect to investment. We said it starts with habit. It starts with starting with whatever you have and beginning to develop that habit. But you also realize that when you and I think there's an illustration I saw. Is it a couple of weeks back, on showing, if today someone offered you 1,000,000 shillings, and if someone offered you 1 cent compounding on a daily basis, which one of the two would you want? I'd ask us to go and do that math. But it will be shocking for you to realize how 1 cent on a daily basis over 30 days could easily get you over the 20 million mark. And yet I'm asking you, do you want 2 million, or do you want 1 cent every day? Whatever you have may look little, but what I keep saying, it's about respecting the little you have. And I think Simon has spoken about money doesn't like a place that's too noisy or not being respected. I also think money likes a little respect. The 1,000, the 10,000 you have, the 5,000, the 2,000 that you have, that you put it away consistently. Return has an interesting way where the money you have earns more for you and continues to build on it. So it's your money making money work for you. And then whatever you've made making you more money, which incidentally has an interesting effect. And that is what I think Irene is referring to as compounding. It's a compounding effect of money. So it's a choice between spending money now. And I like to use the example, you eat what you have right now. What you've eaten is a seed. You have an option: eat the seed or plant the seed and get a forest instead. Then you probably can have as much tree as you want. So at the end of the day, is what you have right now, regardless of how little, is the seed. Put it away, invest it. There's some cost to it, yes, because you could spend it now, but you begin to see that as it compounds, it grows. And the interesting thing I've seen with most of our clients is you begin to realize that you can actually live off the interest. And this you see, especially for those who have accumulated some sort of lump sum, that as you accumulate a reasonable amount, you can actually live off the interest. So whatever you have remains intact, and the interest becomes sustainable. So regardless of how much you have, it's best to begin now. But even if you haven't started, and you probably wanted to start when you were 20, and I spoke to this about the accumulation, consolidation, and the accumulation phase, please start now, because there's always the opportunity to begin building a habit and begin accumulating a reasonable amount. The goal is to put it together. The goal is to get it to 50,000, 500,000, 1 million, and that is achievable with what you already have at hand. Thank you for that question, Irene. And it's a very good question for Africa, because I think it's the one continent where insurance is really not a priority. We look at insurance penetration, and more importantly, even just perhaps beyond the mandatory classes. But I believe insurance is a very critical pillar of wealth creation. And if you go to the Maslow's hierarchy of needs, you start at the bottom, which is food, shelter, and clothing, which is the basic needs. And the next level is financial security. And the easiest way to illustrate this is you buy a bigger television, you buy a bigger padlock.
Yeah,
so it's whatever wealth you have has to be protected. And allow me to read something just to illustrate how important insurance is to this wealth creation journey. The loss of a key breadwinner in the business or in a household, an expensive hospitalization, loss or damage to property, business interruption, income interruption, all create major financial demands. The business should continue. Spouse and children still required to be educated, clothed, fed, we dare say married for the children, and a financial inheritance still needs to be provided for the grandchildren. And therefore, why insurance is such a critical pillar of wealth creation. If you're not taking care of the risks, it means you then cannot plan too long. It means that if you buy that piece of land and tomorrow there's a major hospitalization, you're going to be selling off that piece of land for, at a quick, probably at a bargain, and making nothing. It's going to mean that if you have that longer term investment strategy, you're going to have to break it because you didn't take care of the short term eventualities. So as you create your wealth, you have to take care of your insurance needs. You have to protect. And insurance is risk transfer. Are there risks associated with what you're doing? Are there risks? Perhaps right now, your car, you have it on the road. Is there a likelihood it could get into an accident? I don't want us to work on the likelihood of that. There's always a high chance. So will you stop and repair the vehicle, yours and the other person's, or will you continue with your investments and let the insurance take care of that? In case of a hospitalization, and there's a common phrase nowadays, we are all just one hospital bill away from bankruptcy. We are all just a hospital bill away from losing everything we have built. How much insurance do you have to take care of eventualities in case I get unwell? And to put it into perspective, whatever you pay for insurance is always just a fraction. It is a premium. It's just a small amount in comparison to what you're covered for. So what I see is still a lot of education needed on what is the role of insurance in wealth creation. For everybody on this call, my one ask is look at your risks. And the first risk, and I really hope, Irene, we can unpack that, is you. You're not discussing your car, you're not discussing your house, you're not discussing your health. How much insurance do you have on yourself? God forbid, if you're a breadwinner on this call, if you drop dead today, how do they continue? First, how do they send you home peacefully? And then how do they continue to live beyond the now? And taking care of those is the business of insurance, that you transfer those risks to someone to take care of so that you can pursue your investment strategies without a lot of disruption and therefore without having to have unnecessary losses. And you need to know where your money is going, and that's the budgeting aspect of clearly articulating what you spend. And as I said from the beginning, there is the budget, that is the planned budget, and then there's the actual budget. So the easiest way to get your actual budget is write down every item as you spend it, and at the end of every month, classify it into what is a necessity, what must stay, what is an expendable, what you're doing away with entirely, and what you're adjusting. Now you know where your money is going. And in there, you can clearly indicate how much am I going to put away for what we are describing here. And then the next natural thing is, as you invest, you need to ensure that you are clear on why am I investing? What is my reason for investing? Because some of that is short-term, long-term, medium-term, and those needs will need to be taken care of. One of the greatest examples I like to use is if you have children, you have those needs that will come up next, in a couple of weeks, you have needs that will come up 5-10 years from now. And then after that, you need to make sure there's protection. Are you protecting are you taking care of your risks? First risk is you. Are you covered? Because you're going to need that. You're only as tall as your foundation is. So you need to make sure that you take care of insurance. As again, remember, buy a bigger TV, buy a bigger padlock. You're realizing your family is spending more, your family is growing, you're spending more money. make sure you're upping that insurance to take care of the needs that are required. And at every opportunity, work with a professional, because at the end of the day, we will learn and grow on how much we each know. Stand on the shoulders of those who've done the research, stand on the shoulders of those who've done this, and utilize that opportunity to grow. And last but not least, which is the fifth thing, start now. Start now, because if you wait for tomorrow, I can tell you it's just a good story to have, and it's a very good habit with Kenyans, and I think a lot of Africans as well. When you discuss investments, they tell you, why would I do that? Why not this and why not that? And when you interrogate further, you find there's actually nothing. And which is what is speaking to what Simon is speaking to, that at the end of the day, we wait to depend on our children. We wait to depend on others. And like I tell many parents, breaking news, our children won't take care of us. This generation is different. They're not going to be working hard to take care of you also. They didn't ask for it. So we have to be deliberate to create wealth, not just for now, but for where we are going, so that we can afford our lifestyle. So those are the 5 things that speak to Irene.